Hello traders, the title of the video is Moving Average Trader Shed Light onto USDCAD Technical Trading. So talking about moving averages, I have here the moving average 200, that's the blue line on my chart, representing the long-term trend. And I have here the moving average 20. Or moving average 20. So that's the small blue line on my chart, the thin blue line on my chart, okay? You can see I'm on the hourly time frame now. The moving average 20 did cross above the moving average 200, and the prior retested the moving average 200, and people bought it here on the edge. Talking about moving average trader shed light onto USDCAD technical trading on the hourly time frame. You see that the USDCAD is becoming a little bit bullish. How do we know? Well, the only way that we know that a financial instrument is becoming bullish is when it starts breaking resistances. So you see it probably from a low and a lower low. Now it breaks above this resistance, which was the prior low. So a low before the last low is a psychological price level. The price breaks back above that low, all right, and was retesting it at the point when the moving average 20 was also crossing above the moving average 200. All right, that's why people did buy this stock here. There are other factors that are pushing this currency pair up. Is because of the trade agreement between United States, Canada, and Mexico. The NAFTA, okay, trade agreement between those three countries. There is a new deal, and everybody's happy. The Mexicans are happy, the Canadians are happy, the Americans are happy. So that agreement, new, okay, trade agreement between those three countries, is also very helpful for the US dollar. All right? So the US dollar is strengthening against many other currency pairs because of the current hawkish, okay, monetary policy by the Federal Reserve. So the Federal Reserve is putting up interest rate in the United States, causing the dollar to be strengthening against other currency pairs. For example, the dollar strengthening against the US dollar, strengthening against the Canadian dollar. Not only that, the trade agreement between Mexico, United States, and Canada is also helping this currency pair. Most importantly, it's helping the US dollar to be strengthening against the Canadian dollar. On the hourly time frame, it looks bullish, yes or no? It looks bullish. Though the long-term trend is going down, we see a little bit of strength in the short-term trend. The short-term trend represented by moving average 20 here. So that's what we can say on the hourly time frame. But you need to look carefully, right? On the hourly time frame also, though it's becoming it was bearish before, people were selling along this trend line. So you see this high here, people sell here. So though it's becoming a little bit bullish, remember that if it come near this trend line here on the hourly time frame, those trading on the hourly time frame will try to sell it again here. We will see. So looking on the hourly time frame, can go to retest it, and then pull back again to this support level, forming a kind of inverted head and shoulder chart pattern. Okay, the head, the left hand side shoulder, and the right shoulder before going up. So this is about looking at the hourly time frame, where we can see using moving average 200, moving average 20, and the price action. All right, but we can't stop only on the hourly time frame. So we go a little bit more. So what we are doing is that's what we call a down top. So we are not starting from the higher time frame. We are starting from the lower time frame and then moving up. So we can say down top. All right. Okay, technical analysis. The top down will be to start from the higher time frame, breaking it to the lower time frame. So on the daily chart, look at the moving average 200. The moving average 200 is looking bullish, but on the hourly time frame, we see that it's going down a little bit more, which means here it was going up because of what we have seen on the hourly time frame, it looks to me that this one on the hourly, on the daily chart has a high chart to turn around a little bit down. Again, on the hourly, on the daily chart that we are now, what's going through the mind of traders? So you can see that the price breaks below that the moving average 200 on the hour on the daily chart is now retesting it on the edge. So that move that we see on the hourly time frame is part of this move to retest the moving average 200. So it breaks below the moving average 200 on a daily chart. Now it's retesting it. There are people here trying to sell it. You can't ignore it. But the best place to sell it, if you want to participate in those that are selling here, is to go to the hourly time frame and to sell it on the edge of that trend line, that the bearish trend line that I was showing you on the hourly time frame. That would be a better place instead of that. So the price can go a little bit up above the 200 to retest that trend line on the hourly time frame before people will attempt to sell it. But let's look at the moving at 20. Now you see on the daily chart is crossing below it. On the hourly time frame, crossing above it. All right. All right. But if you rely on the moving averages alone, you'll get confused. So how do you avoid the confusion? You trade around key level. So the key level, you see there's one here, 12980. So at this junction, we will say to trader priority to bullish signal above 12980. A prior to bearish signal below it. You can go boom, 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 boom to 12980. Then people will sell it again, or you can brace above it, find a support, and go up. So prior to bullish signal above that level, 12980. Prior to bearish signal below it. All right. Anything else we can say here? So if below the moving average 200 is retesting it, moving average 20 cross below it. There will be some sellers here, but if you want to trade it, we want to use, okay, what I was telling you now, that key level 12980, one above and below, looking for trading setup on either side of it, bullish above and bearish below it. Right now, also on the, okay, you see this trend line also on the daily chart. We had a similar trend line on the hourly time frame. On the daily chart, there is also again this trend line. Also, if they push it up, be aware of that trend line on the daily chart. Okay. Moving up one more time, we go to from the daily chart to the weekly chart. So now we are seeing a bigger picture. All right. So we were only looking at this session only on the hourly and daily chart. Now we see the bigger picture. What is happening here is becoming clear. There was a trend before. Now the price is correcting that trend. People are taking profit. Those bullish traders that were buying the USDCAD are now taking profit. So this is incorrect first. As I told you before, we see 1, 2, 3. Now it's going up like this. All right. Okay. But on the weekly chart, what can we say now? Okay. On the weekly chart, there's another key level that appear now. You see that's this one, the green one here. 12817, 12817. That's the green line here. 12817. You see. All right. So for swing traders, all right. For swing traders, there are some swing traders here that bought it. You see the tail. Those are swing traders that are buying here at this support level. So the price breaks above that green line. And now it's retesting it, and some people are buying here. So on the weekly chart, swing traders. Okay, I'm watching this candlestick pattern. You see, this is one up, one down. You see the shadow, one up, one down on that green zone. That candlestick bar is now closed because today is Friday. So next week, swing traders will be looking for bullish trading setup. Okay, above the 12817, precisely in the zone of 12910. Okay, 12910, the closing price of this weekly candlestick bar. So that candlestick pattern, one up, one down, it's an invitation for bullish traders to be prepared, not just buy, but to look for an opportunity to buy, as I said to you, above okay, either 12980 or okay, where the price did close now using a different time frame trading method on the edge here. Looking at the moving average 200, you can see that it was going up. It looks to me it's about to turn around here. Though it looks like it's going up, right? It looks to me that it's about to turn around here. And the 20, one should not rely on the 20. Now moving average. Why? Why one should not rely on 20 on the weekly chart? Why? Because the moving averages become very useless when we see a consolidation. You see the price was oscillating here. 1, 2, 3, 4, 5, 6. Right? So blah blah blah. So in that case, when the price is oscillating like this, it's better to ignore the moving averages. So I will not deduct anything from, you see, it went below the 200, went back above, it went back below, it went, this is what we call whipsaw, because of the price structure here on the weekly chart. One should completely ignore, all right, the moving average 20, which is the short-term moving average 20. Completely, you should ignore it, because this is the time that those who are using moving averages could get whipsaw. It's a completely crazy way to use moving averages when the price is oscillating in that fashion. Crazy, completely crazy. But it's going on all the time. Traders are talking about it every day, but people forget and they keep doing it. People say, oh, it crossed above, and I cross below, and I cross above. It's consolidating. Just ignore it for now. Ignore it. Don't take the message. All right, it's consolidating. You see, it's consolidating. Now, D below that consolidation, you see now that small triangle there, a break below, retest. Now we have one up, one down. We really find a support and continue to go up. Okay? So at the time when you were about to enter the trade, so you gather this information, you see one up, one down on the weekly chart. The key level you are watching for swing trade is 12817. If you drop down to the hourly time frame, you see probably some of the people enter here, but you can be very patient again, all right? Because again, on the hourly time frame, I can keep drawing line. Personally, if I want to buy, I want it to go back above 129, you see, and then I retest it here. So if you pay attention to this channel down on the hourly, I'll prepare to go and give us a higher low after this low here. Then the common center is kaput, and then we take it from there if there is an opportunity to buy. If not, there's no opportunity to buy. Don't force it. It's going down. Well, one should sell it instead. If we are selling, you see on the edge. So if you're going now, careful. Okay, so on the weekly chart, we see one up, one down, a bullish pattern. On the hourly time frame, it's looking also bullish because it has broken a resistance level. On the daily chart, it looks more bearish because it's retesting the moving average 200, break below, retest. We will see whether it will go up a little bit more before finding the resistance. So if you go to the on the weekly chart, we ignore the moving average 20 because the price is consolidating. All right. Now I'm on the monthly chart. We cannot see the moving average 200, but we can see the moving average 20 right there. It's sloping down. 20. So what we have said on the weekly chart, the priority bullish signal above 12817 is still valid on the monthly chart. But on the monthly chart, that key level 12980 is a resistance ahead at where the price is headed to. That's what I'm saying to you. Like I show you on the hourly time frame, it's better to wait for it to go above that 12980 before trying to buy it. Okay. All right. So all in all, so far priority bullish signal above 12817. But we are now near resistance at 12980. For those who want to buy, one should look for opportunity to buy it above 12980. However, if you find a resistance near the 12980, one will implement a top-down trading method to sell it, referring, all right, to the daily chart. Okay, here, so below the movement 200, retest this, we may go all the way up. So I show you on the hourly time frame. Okay, that trend line on the hourly time frame will determine what you are doing. Okay, so going a little bit above it, will you find a resistance there again and come down. But as I told you, on the hourly time frame, it looks bullish because it breaks this resistance here, find a support there. Okay, we will see what will happen. Okay, so all in all, we want to map out the chart, the resistance, the key level. All right, we want to acknowledge the moving averages, but we cannot acknowledge the moving averages during the consolidation phase. It's crazy. Don't do it. All right. All right. But once we acknowledge the moving averages, we must now go back to the price action, okay, and interpret the language of the price in order to determine whether one should buy or sell. So talking about whether one should buy or sell, we use key levels. We buy above a key level, we sell below a key level. The key levels that we are talking about now, okay, there are two specific key levels that we did mention. All right, the green one, 12817. The next one, 12980. I will not repeat myself again. Look for trading opportunity around those key levels. Before I wrap it up, I want to talk about another very important point for those who are trading the USDCAD. I draw a trend line, the first one from this point here. Pay attention, very, very careful to those two trend lines that I'm going to mention. Don't forget them. Okay, don't forget them. Which color should I use now? Okay, use orange. So this point and this point. Then again, I choose the same point here, but connect it to this one here. Now we have two trend lines that are forming an angle. Now you can see that the price is finding a resistance there at the first trend line and finding a support at the second one. This is what's going on now. Apart from everything that I said before, there is a consolidation also on the monthly chart. In fact, a weekly chart. I am on weekly chart again. Be aware of that or trend line. Okay, so if where we are now, we are saying that we have one up, one down. If we start going now, watch that trend line here. Again, every time we have two trend lines forming an angle, okay, we can also remember the median line between the two of those trend lines. It's like a channel. That's why this one went up. He reached the median line between those two trend lines. Okay, found a resistance and come back down. But we'll see whether it's going to continue to go up. So be aware of what is happening. So all in all, you have all the line, the trend line. Now look for trading setup around those key level and concentrate on the price. Okay, and use a top-down trading method. All right? For area wave trader, we see 1, 2, 3. All right, it can go up like this: 1, 2, 3. So something like this can happen. Go up like this one. Okay, and then pull back, and then again 1, 2, 3. Which means what I was saying to you about the Federal Reserve policy. Which means the dollar, the US dollar may be strengthening against the Canadian dollar, propelling the price to go up a bit more to this resistance here. And then you will pull back like this. All right. This is for area wave traders that are trading USDCAD, because we have trending fast, a correction is in play, in the 1, 2, 3. We may see again 1, 2, 3 up. Okay, forming a double retracement, even going above this one. I doubt it. Okay, before it comes down, 1, 2, 3, 4, 5 into this session somewhere here. That remain to be seen. We're taking one step at a time, as everything we have discussed now. We just flow with the price, trading around those key level, one step at a time, looking for trading setup, and then implementing a different time frame trading method to trade it. All right. break it down. So we have done it from the lower time frame up. So hourly time frame, daily time, weekly chart, monthly chart is a down, top trading method. Okay, but when you find a trading setup, you're going to apply what we call a top-down trading method. So you find a trading setup on a higher time frame. If you are lazy, day trader, you can use at least a 2-hour time frame or 4-hour time frame as your higher time frame. Or I'll push it a little bit to daily chart at least. All right. Okay, you are a swing trader, you can go to the monthly chart, look for trading setup, and then break it down to the lower time frame. Or it's a top-down trading method. So this will conclude our discussion today about moving average. A trader shed light onto USDCAD technical trading. We were using the moving average 200 and the moving average 20. We saw, okay, the crossovers. We acknowledge those crossovers. We ignore the moving averages during the consolidation phase. But at the end of the day, we are trading the price. Though we are using moving averages, we must concentrate on the price, looking for trading setup. So for instance, if you have a bullish crossover, what is the price telling you? Did the price confirm it? Okay, if the price confirm it, that's a trading setup. Now break it down. If you see a bearish crossover, did the price confirm it? But any crossover during consolidation, what do? You dump it, you ignore it, you leave it alone. You concentrate instead on the price structure of the consolidation, either in a horizontal channel or in a triangle, and so on and so on. If this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, please mark it down. I think this is an essential tutorial that can help other USDCAD forex traders. Feel free to share with your friend on Google+, Twitter, Facebook, and Tumblr. If you have not yet subscribed to our channel, please subscribe to our channel today. It is free. So anytime, make sure you click on the notification bell, ring the bell, please. Anytime we record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about moving average trader, shed light onto USDCAD technical trading. Happy trading to you all, and I will speak to you soon. Thank you for watching.